Hello there everyone, today's video is all about company car tax and specifically how you can avoid it, relieve the pain of company car tax. So let's just dive in with some numbers. Assume you've got a director shareholder who's decided to buy a car inside his company. One of the classic questions you always get asked as a tax advisor, should I have my car inside or outside the company? Assume in this case, this guy's got it inside the company. So it's a company car that he acquired in 2015, and the list price of the car, £30,000. The emissions of this particular car, 140 Gs, 140 grams per kilometre. So in 2015-16 tax year, that gives rise to a benefit in kind of 21%. 21%. So when we're working out the benefit in kind for him as the user of that company car, you multiply the relevant percentage by the list price. 21%, £30,000. It's a benefit in kind of 6,300. So that's the amount, the BIC that he's taxed on at his marginal rate, 6,300. So the problem is when you've got company cars that are old, you are losing out. And why are you losing out? It's because over time the government changed those emission bans so that the same car basically becomes more expensive over time. That's how it works. So let's assume in this example, we fast forward to this tax year, 22-23, he's still got the same car. So that list price doesn't change. The market value changes. Sure, it comes right down, but you're getting clobbered for tax on the list price still 7 years later. So again, you work out the percentage of the emissions, the relevant percentage times the list price. So the list price doesn't move. But what happens though is that over time the government brings down, has brought down the emissions percentages. So for this same car that he had 7 years ago, where the relevant percentage was 21%, in this tax year, it's 35% because the bans have kept coming down. So the benefit in kind that this guy has for the same car that's now 7 years old has jumped from £6,300 a year to £10,500 a year. So, it's almost like counterintuitive. You think, well, how can that be? The car's not worth as much. Surely it's going to cost him less in tax over time. Well, no, it's not. The reverse occurs, like I've just shown there. So, because that list price doesn't move and the percentages keep coming down, you're getting stung. So what can you do about it? I mean, if you look at this, the other thing as well, of course, is employers' Class 1A national insurance that the company has to pay, which has gone up recently. So that's 14%. So basically, the total tax and national insurance bill is greater than the value of the car. So what might he do about it? Well, one thing he can do about it is transfer ownership to him. So in other words, get it out of the company to him. Now, what does that do from a tax point of view? Well, it's treated like it's a benefit in kind. So assume in this example that our car that was list price 30 grand when it was new in 2015 is now worth £10,000. So the value of £10,000. So how you treat it for tax, you'd say, right, that one-off transfer to get it out of the company into the guy's individual name, that is a benefit in kind. £10,000. So we paid tax on the BIC of £10,000, but that £10,000 is still less than the annual amount that we've got to now. £10,500 is the benefit he paid on last year. And of course, if he continue to hold it in the company, it's just going to keep going and going at ever increasing rates. So this is like a one-time hit, right? Final BIC on 10 grand, get it out the company. So then it's in his individual name. Okay, so no more company car tax that he's getting stung for on an aging vehicle, assuming he wants to hang on to this vehicle because it's might not have that many miles on the clock, who knows? But anyway, what about future running costs? Well, company can pay the running costs. So even though it's now his own car in his personal name as opposed to the company can continue to pay for the tyres and the MOT and the servicing. That would be a benefit in kind on him for that perk, but it's going to be a lot less than £10,500 annual charged based on the old list price. So, that could be, I don't know, it could be hundreds of pounds a year, never mind 10.5 grand a year. So that could be one option. But then, of course, to counteract the cost of that BIC on the running cost to him, he can claim a mileage allowance because it's his car that he's using. So on business miles, 45p a mile, you can get 4.5 grand out, 10,000 business miles a year, 10,000 at 45p, 4.5 grand. Surely that will more than pay for the costs of any running costs that the company continues to pay for. Or just going forward, the company doesn't pay for anything and the guy just submits a mileage claims because they are quite generous at 45p a mile. So, food for thought there. If you've got a company car and you're the director shareholder of your own business, you've got a company car that's been in there for many years, let's say over 6-7 years, you're probably in this scenario because that's all, that's the way it is. The bands have come down on these percentages. That combined with the fact that you always are hit for a multiple of whatever the list price was when the car's depreciated a heck of a lot, you really are losing out having a company car. So consider getting it transferred into your own name. Hope you liked this video. If you did, please do remember to subscribe. And as always, I'll see you soon.